It's always one of the biggest challenges, but we'll be certainly covering that at some stage today. Let's get through today's data for you. And it's been a relatively quiet start to the day. It's been very much a mean reversion type morning session. Nothing much of any real interest in terms of overnight data. Chinese trade balance numbers boomed to 91 billion US dollars, and quite a sizable pop on that one. UK claimant count change was forecast at 95,000. It actually was only 23,700. So slightly better than, well, substantially better than had been expected. Let me just bring across the numbers. You can see here the unemployment changes and counts and various other things. And you can see obviously the employment rather than the unemployment. So you can see that the unemployment numbers, 23.7, 102,000 unemployment change, which was revised down from a prior of 135,000. Average earnings was also quite useful for us, 4%. Average earnings, of course, have been very inflationary for the UK recently, so we've got to be very mindful of that it has come down to 4% against the forecast 4% low. So that's a good number for us in terms of equities, for example. Unemployment change 265,000, higher than the average forecast was 123,000. And it's a good set of numbers. It's not a bad set of numbers when you've got better numbers across both of those metrics. Obviously, that's not necessarily better in terms of the UK getting a higher CHESI score, but because obviously this could lead to a more measured move by the Bank of England. They don't seem to be in any need to hurry based on those numbers. And, that's not a bad sign for the Bank of England. So I'm talking about good for the Bank of England to see those numbers improving just a little bit. It would be better if earnings were down a little bit faster, a little bit lower, but it's at least going in the right direction. The only challenge to that earnings number was that we revised up the prior from 4.5 to 4.6, and that was not good. And that's going to keep the Bank of England higher for longer, of course. In terms of other data today, it's one of those kind of days. It's but naff, to be honest. There's not a lot of stuff this afternoon, as you can probably see from your own calendars. We've got a few speakers, Baron Bowman speaking this afternoon from the Fed, 3 o'clock, 5:15 London time, but that's about your highlight of the entire day right there. It does pick up tomorrow, of course, something to be very mindful of tonight when you come into your close. Was the tomorrow at 1:30, we've got the CPI prints, we've got the oil inventories, and we've got the 10-year bond auctions tomorrow. We've also got UK's GDP numbers expected to print at 0.2%. So there are some points of interest over the next 24 hours, just not today. Just not today. So we have been cycling the market quite a lot today, trying to get involved in some decent cycle ideas, trying to take advantage of the easy stuff, just avoiding the nonsense, avoiding the noise. And we've talked a little bit about Hurst this morning on the basis of the Hurst variance Fourier transform type conversation, and we'll certainly dive into a little bit more detail on that in classroom this afternoon. Welcome in, guys.